Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and quite excited today to have three guests on the show to discuss Fortuna Silver's earnings. They had their earnings out last night, and joining me on today's call is the CEO and co-founder of Fortuna Silver, Jorge Ganoza, will be joining us and giving an overview on the results. We're also going to be talking about the progress on the Séguéla gold project, which has been coming along quite well so far, and expecting first gold pour mid-2023. So Jorge, it's great to see you again. I know you're calling in from Paris and you've had a long day, but thanks for joining us and making some time. I know we have a lot of questions coming in for you already, so good to have you here. And how's everything going?
Chris, a pleasure to be in your program again and be joined here with by Don and Dave. Looking forward.
Well, I appreciate you being here, and congratulations on a good quarter. And of course, I'm joined, as always, by my dear friend Dave Kranzler of Investment Research Dynamics. Dave, good to see you again, along with your big silver panda. How are you today?
Bonjour. Likewise, good to see you guys.
Well, thanks for joining us, and nice to have Don Durrett back on the show of Gold Stock Data, who has been following Fortuna for quite a while as well. So great, and to have you all here, and looking forward to a good call. We'll be taking questions from the audience as well. But Jorge, why don't you start and highlight the results that you guys just released last night, and you can take it from there.
Sure, we had a strong quarter. Underpinned by solid production, which we pre-released. So in the quarter, we delivered 101,000 ounces of equivalent gold. Revenue in the quarter was 68% gold, 20% silver, and the balance 12% byproduct lead and zinc out of our Peruvian operation, the Caylloma mine. We had $166 million in revenue, and we ran the business with an EBITDA margin of close to 40%, 39-40%. But more importantly, and we try to highlight this in the news release with the results, we managed to log $34 million of free cash from operations. And what is free cash from operations? That's a non-GAAP figure. Is cash generated by operations, discounting investment in at the mines, taxes paid, interest paid, and the corporate expenses. So the business before growth investments in Séguéla generated during the period $34 million in free cash. So that's a robust free cash flow generation for a business of our size in this price and inflationary environment, right? We had a 2 cents accounting loss driven by write-downs on investments we had in the past, and write-down of some inventories, and loss on some derivative contracts that we have on byproduct lead and zinc. But the adjusted net income was slightly positive, 1 cent per share. Again, we highlight the strong free cash flow generation of the business. In terms of cash flow per share, we beat street estimates by a wide margin. We had 22 cents per share on cash flow against analyst estimates of about 18 cents per share. So, all in all, a quarter where we generated strong free cash flow. That's always welcome. And our development project, Séguéla, advanced, quite on time, on targets. That's another highlight for the period. In this challenging environment for construction, we're seeing a lot of construction projects in mining and other, industrial sectors and infrastructure sectors derailed by strains on the supply chain and inflation, right? But we managed to keep Séguéla construction on time, on budget. We're 83% complete with the construction. We have largely de-risked already the construction of the project. We're, tracking well to deliver first goal by mid-2023, mid next year. So, all of that is advancing well. And we also shared another good news for the quarter, which was, subsequent to the quarter. On Monday, we received a positive court ruling in Mexico, which ratified that our 12-year mine environmental permit extension stands against an attempt by some mid-level government official to reduce it to 2 years, right? So we're back to the original 12 years we got in December of last year, and that is a very positive news as well.
Well, I can imagine, obviously, we talked about that last year with the unexpected news of the San Jose mine permit. Anything else you can add there about how that got resolved? And is that a final decision now? I know you mentioned on your investor call there's no appeal of that. And so is that good to go at this point?
Yes. We only had that. We were all awaiting that resolution. We always had the strong view that we were in material compliance with applicable law and standard procedures. And it's taken the court several months to rule on this, but we finally got that ruling, and it's completely favorable to us. It's non-appealable to the Secretary of the Environment in Mexico, Semarnat, so it stands.
Well, that's certainly good to hear. And Dave, did you have some questions that you would like to start with today?
How many can I ask? No, I'll just start off with a couple, and then Don can go. One thing I noticed, Jorge, and this probably applies as much as anything to the upside leverage Fortuna has to the prices of gold and silver. And, I guess I don't know what kind of increase or change in the amount of ounces produced you're expecting for the fourth quarter. But I did just run some calculations, and on a year-over-year basis for the third quarter, it looks like silver, and this is very rough, it's not exact, looks like silver was down about 27%, the price, and the price of gold was down about 5%. So would it be unreasonable to gross up the price of silver and gold, assuming the prices silver and gold stay at least the same where they are for all of the fourth quarter, to gross up the price of silver and gold versus what you received in the third quarter by those numbers on a year-over-year basis, to kind of project what your revenues would be based on third quarter production? Does that make sense?
Yes, it does. It does. Over the medium term, it's always, from my position, interesting to see some investors wanting to project what's happening today in terms of cost and production, and just amplifying the margins based on an expectation of higher prices over the medium long term. What happens when you have higher prices is that everything gets more expensive to us, right? Labor and is because there are structural bottlenecks in the industry, right? So we quickly, everybody wants to build their mine, everybody wants more trucks, but that's medium long term. Short term, the answer is yes. It's a reasonable extrapolation. Margins amplify. We are expecting to meet guidance. We've been saying that repeatedly. So we are expecting another 100,000 ounces of gold equivalents next quarter. That would take us to the midfield of our guidance range. We've been telegraphing that consistently throughout the year. And our costs, I believe we have Our costs today are looking stable in the upper range of the guidance we provided to the market, and that's where we are today. No, the $1,150 to $100 per ounce, all-in sustaining costs for Lindero, Yaramoko. I would expect costs to come down a bit more in the all-in sustaining cost, right? Including sustaining capital investments to stay hovering around $1,300, right, for the year. Into the next quarter, we could expect prices like that. This quarter for Yaramoko was a bit expensive on investment. And the silver mines, $15 per ounce all-in sustaining. That's what we're seeing. That looks steady. So yeah, you can play around for at least for the next quarter with prices, and that should give you the margins you can expect and the cash flow generation that you can expect from the business. Absolutely.
That's fantastic. And speaking of inflation, when I look at your cost structure and what your guidance is for the full year this year versus some of the other producers, I mean, it seems like you guys have a little better handle on managing your costs than some of your peers, and well, some of the larger mining companies as well. Can you just talk about what you're doing to manage the price inflation risks that are going to be affecting your business going forward?
Yeah. Undoubtedly, we're all being pinched by inflation, right? If I track the main consumables or whatever, the things that move the needle in terms of cost for us are labor, diesel, cyanide, cement, explosives, and steel. So those are the consumables we track closely. If I look at the prices of those consumables with respect to where we were in early 2021, for example, a little over a year and a half ago, we see inflation in the range of 35 to 70% on those consumables. Now, our guidance for 2022 captured a lot of that. Now, on absolute terms, although we've seen inflation, we budgeted for that inflation, no? So that's why we're not derailed against guidance. But what measures are we taking? It's specific to each mine, and we have 4 operations. For example, in Lindero is an open pit. It's a big earth movement exercise every day. So diesel, we self-generate power at that mine with diesel. We're transitioning to solar. We have a project to transition to solar, but right now it's diesel. And so we hedged diesel early last year, right? We hedged diesel, so that has helped a lot. We are optimizing cyanide consumption. Cyanide is the second largest input into the process in terms of cost. So our budget for the year for cyanide was 0.5 kilo per ton, roughly, and we're currently consuming at a rate of 0.33 kilos per ton without impacting recovery. So we are optimizing the process, right? The same with sulfuric acid. That mine consumes sulfuric acid on the SART plant. We have been able to lower dramatically sulfuric acid consumption. And on and on and on. But each mine has its own dynamic, right? And those are the levers that the management teams at the sites are pulling, right?
That's fantastic. Don?
Yeah, so I am a shareholder. I've been a shareholder a long time, since 2009, and I got in cheap. And I've always focused on the long term. I always do. Quarterly results. The only thing I care really about a quarter results is that basically you have enough free cash flow that you don't have to dilute your shares. You can grow the company, and you're doing all that. So everything's working for you. But just to get kind of a baseline going forward, you your results were basically 101,000 of AUEQ production this quarter, but you didn't list the AISC for the total. Do you have cash cost and AISC for the 100,000 AUEQ?
You know, we are not doing that because we have pure gold mines too. Silver gold mine, where silver is the primary contributor, and then we have a silver mine where zinc and lead are the two largest contributors, right? So we decided to provide the data by asset. Something that we've been doing and we do internally is we look at the gold segment and at the silver segment separately.
All right, that's fine. I'll have to, my database, I'll have to split it apart. It's not a problem.
We provide that, we do provide that breakdown in the news release and in the sustainability in the MD&A as well.
Yeah, I asked the question for kind of for selfish reasons because my database, I'm considering you as a gold miner because you're adding another gold mine, Séguéla, which is another 100,000 ounces. So you have 3 100,000 ounce gold projects. So I basically grouped you as a gold miner. But now it looks like you got San Jose fixed, and I think San Jose is going to be worth a lot of money as the price of silver goes higher. So that's going to really help your margins. It's going to make you basically a stronger player than, say, a pure gold miner going forward. So going forward, if we look at like the strategically, so if we look at your Caylloma mine in Peru, it seems like it's a non-strategic project. Are you thinking of selling it, or do you think it has growth potential? So tell me about Caylloma. Why do you guys still own it? What are your plans?
Yes, how does it fit in our portfolio today, right? Yeah. I have to say that we believe that we can manage effectively with the infrastructure in place, around 5-6 mines. No, I mean, we've been through that exercise. And we believe that operations of the size we have, probably we would start losing effectiveness with 6 assets, something in that range, right? We're currently going towards 5 with the incorporation of the Séguéla mine. So if something is going to come in, something will have to go out. But not at this stage. Caylloma is our first mine. It's a mine that's been operating under our management since late 2006, September 2006. And I have to say, it has been our best business. We paid $7 million for that mine. We invested 10 to get it into production. And that mine every year gives free cash flow. $8 million in a bad year, $20 million in a good year. Again, it's our smallest mine, currently has reserves for 6-7 years. And if I include resources, I can easily see a decade of production ahead. So it's looking solid. It's not a headache by any means.
How would you like that mine at $50 silver?
That mine gives us a lot of leverage to $50 silver. We are right now, for example, not focused on the rich silver zones of that mine. We're more focused on the silver lead zinc zones where silver is lower grade. But those areas are wide, mineralization is wide, so it lends itself to high degrees of mechanization, so we can operate it efficiently at lower cost. If silver goes to $50, we will reopen the silver zones where the veins are narrower, but the grades are higher, right? Excellent. So it gives us that flexibility. It's a mine that I like in our portfolio today, and the question of what's its place in the portfolio will arise if we bring another asset, right?
So that's staying on the strategic focus here. So investor did not like the acquisition of Roxgold. I mean, basically you have two, big gold mines, economic gold mines. Those mines alone, I think, are probably worth your market cap. And so it's like you're not getting any value for them. It's kind of crazy, but I think you will over time. But my question to you strategically is that you almost now have to force the marketplace to acknowledge the value of your company. So you do that, in my opinion, by basically a really clean balance sheet and pay a dividend and buy back stock shares. So once the price of gold and silver take off here, it's not going to take you, if you strategically apply this method, it wouldn't take you too long to basically pay off your debt. So once your debt is basically zero and you get, let's say $300 million in cash on your balance sheet. So you have $300 million in cash, you got no debt, and you're generating, say 50 to 100 million, well, more than that, say 200 million in free cash flow a year. 100 million in free cash flow a quarter, and you have no debt, you have 300 million cash. In that scenario, so I'm all about multiples. I'm an investor, right? So I look at the free cash flow multiple. So if you pull that type of scenario off, investors are going to run to your stock, and your multiple is going to be 15, maybe 20, potentially higher than that, but at least 15, right? And so you get basically this double kind of an exponential growth on your share price. You get it, one, for the price of gold going up, and then you get it second by investors buying your shares, right? And your multiple goes higher. So what say you about my strategic approach for you going forward?
Yes, I don't disagree at all with that. Let me say that first, with the acquisition of the business in West Africa, I think there were some legitimate questions and concerns from investors with respect to how effective would we be integrating a business in West Africa. We broke the mold. We were bold enough to break the mold. Most companies stay focused regionally, play in their comfort zone, and even how analysts break down their coverage universe. There is like a North American analyst, a silver analyst, a West African analyst. So we came in and we broke them all. So that threw people a bit off. For us, we always expected some of that. I have to say that we saw more than what we expected, but it was short-term pain for long-term gain. And what we have to do is, in line with what you were saying, Don, first, make sure that we can integrate the business successfully and we can deliver solid, reliable, steady performance every quarter. And that is what we've been doing for the past 4 quarters. And I think that the shares are going up right now. It's not the result of a good quarter. It's the result of investors recognizing, hey, listen, these guys are delivering 100,000 ounces of gold equivalents every quarter at very competitive costs. And they're doing it steadily, quarter after quarter. And that speaks to our ability to run an efficient business, not only in Latin America, but also in West Africa, right? Second is capital allocation now. To your point, we need to, with that cash, completely de-risk the construction of our flagship property, which is Séguéla. So once that is done, we need to bring debt down. We're not highly leveraged. Our debt to EBITDA is 0.4. So we're not highly leveraged to debt. We have a very, very manageable debt level for a company of our size. But anyway, I've been in this business all my life, 4 generations. I know that this business has to be run with no debt or very little debt, no? And we plan to bring down debt and then institute a meaningful program to return to shareholders. To me, a dividend or a program for return to shareholders needs to have 2 components. One, it has to be meaningful. right? I see a lot of companies that play the game of paying a dividend just to get recognized by the institutions that buy dividend-paying stocks. No, I don't. That doesn't resonate well with me. So one, the dividend has to be meaningful, and second, it has to be sustainable. And if you see what we've been doing over the last years, Don, we used to have a high margin business 5 years ago, but with short life mines. Because of the nature of the deposits that we were mining, it was difficult in those epithermal vein type deposits to put in front of us lots of years. We were always running those mines with 3, 4, 5, 6 years, right? Now, if you look at our portfolio, we have 3 assets with 10 years plus in the life of mine. So now we can talk about something that's sustainable, right? Because we have 10 years plus in reserves in good assets. So we can now talk about instituting a sustainable, a meaningful dividend. And that's where we are heading, no? Bring down, allocate capital short-term to the construction of Séguéla and delivery of Séguéla, allocate capital to lowering down debt, allocate capital to a meaningful return to shareholders, be it a buyback. We are already doing a buyback, no? For the second quarter, for the third quarter, it has been very modest. Yes, it has been very modest because, again, we are keeping our treasury focused on de-risking Séguéla, no? That's the priority. But, looking at where the valuation was, where the share price was, we couldn't just stay there, and we did participate in the market a bit, and we have a share purchase program in place. Right?
Yeah, just one final thought. So I always look out into the future. That's how I invest. So I basically say, okay, where's this company going to be at certain price levels, for instance? So I actually think that I value gold companies at $2,500 gold, which I think is a very conservative number. I think we're going higher than that. But at $2,500 gold, your company will have $200 to $250 million in free cash flow. And I mean, if you look at your balance sheet, if you start throwing that kind of cash on your balance sheet every quarter, well, it would be, 50 million plus a quarter. But you just did 34. So I'm being conservative with these numbers. But my point is, you guys are really set up well. Just like you said, long life mines. So your balance sheet is just going to really, really improve here as the price of gold goes higher. So as anybody that's leveraged for, investing for higher gold prices, you're one of the stronger companies out there at the moment. Anybody that, basically can be profitable at these levels, with these margins at these levels, is in a good position going forward. My one final question to you is that you said that your management team is kind of comfortable with like 5 assets. You don't really want to grow aggressively. So if your balance sheet just keeps getting bigger and bigger, do you think maybe you will grow, or what's your thought on that?
No, in this business, this is a never depleting business, right? So every day we're consuming our reserves. So acquisitions are not just for growth, are also to give sustainability to the business, not, So one, we favor organic growth. And we try to position ourselves in mine properties and assets that offer those opportunities. That's one of the reasons we love Séguéla so much. And the other properties in the mines in the portfolio as well, but particularly Séguéla. And we look for growth, but you see, I always aspire for bigger and better. So I always say, if we're going to bring something in the portfolio, it has to be better than what we already have there. And that is what we have consistently been doing.
Nice. Okay,
So,
let me interrupt you. You answered my question. I like that bigger and better. So I said it was my last question, but I have to ask this other one. It's getting really expensive to build mines. And so all these development projects, companies cannot afford to build them. They're too small. Banks aren't going to lend them the money because the CapEx are really getting high. I mean, it's getting to the point now where you can't, you know, 100,000 ounce mine, you can't build it for $100 million. You know, it's getting really, really expensive to build these mines. And so my point is to you is that there's a lot of development projects out there right now, and these companies are kind of stuck. They can't build them. They can't get them financed. So let's say let's go 2 years down the road, you know, gold is, you know, you're generating a ton of free cash flow. You said bigger and better. And these development projects, you're looking at them going, you know, I can build that mine. I have the finance. I can build it. Why don't I build it? You know, why don't I talk to those guys? Isn't that possible?
Yes, and to answer that, let me go back to geography, because people don't understand or move to West Africa, you know, and I try to communicate and educate on this. You touched on something key, how expensive and difficult has become to deliver successfully construction projects. So you have to make life easier for yourself as well. And by that, I mean, you know, look for assets in jurisdictions where you can effectively build as well, right? So, or we are building the Séguéla mine for $173 million total cost. It's a 3,500 ton per day mill with open pit mine that will, you know, deliver 150,000 ounces of gold annually for years to come. So where can you do that? You know, I'll use an example. Lundin Gold, a company we are probably all acquainted with to some degree.
I agree.
Yeah, Lundin Gold delivered the Fruta del Norte deposit in Ecuador. They did an excellent job. It's a marvelous deposit. It's a great company, well run. It's in Ecuador. Ecuador is not a mining country. And they built a 3,500 ton per day mill with underground mine in rough topography, on time, on budget. And do you remember what was the capex for that construction, which is similar in size to Séguéla? $690 million.
And today it would be $1 billion.
You know, but so we have located ourselves in places where you can still have an edge on how effectively you can build a mine, because in West Africa is a place where you have all the industry clusters, just like Peru, just like Mexico, places where we're well established. You have the contractors, the knowledge, the equipment manufacturers, the service providers. All of that allows you to be more effective. That's one. And second, absolutely, yes, we see a big opportunity with pre-development stage companies with their one asset, and where they find the challenge not only economically, but also dealing with the complexity of permitting, and the timelines for project development have extended a lot, and the complexity is much higher, right? Yeah.
I agree.
Okay, and we actually have Dave, do you want to go ahead? We have a couple of questions that have come in, but Dave, please.
I'll let the audience questions go.
Well, we had one, what can you talk about in terms of exploration activity outside of Séguéla? I understand there was drilling in several other locations, and anything you can tell us about new discoveries or what your exploration focus will be next year.
Yes, our exploration budget this year is $30 million. That's that's worldwide, across all sites, $30 million. Bear in mind that this is a construction year, and next year is also we're finishing construction. So we're tempering our exploration budgets and a bit. But still, $30 million is a sizable budget for exploration. And next year, we also look at, $30 million. Our success at Séguéla has been, so big that it has overshadowed a lot of the work we're doing at the other sites, undoubtedly. So let me say that, in Argentina, we've been drilling this year the Arizaro porphyry. Arizaro is a twin gold porphyry, gold copper porphyry. It's a twin of the Lindero porphyry where we have our mine. It's only 3.5 kilometers away. We've been drilling there. We are working to establish a first resource. When we acquired Lindero, Arizaro had a small 500,000 ounce resource in the inferred category that we decided to take out of our books because we thought that the geologic model was a bit too aggressive. So we took it out of our books. We've been drilling, and we're now in a position where we can come up with our first Fortuna resource estimate for Arizaro. And that's something you likely see the outcome of that work in our resource reserve publication early next year. Now, it has not been a big priority because at Lindero we have 13 years of reserves right now, right? So it has not been a big push or rush there. Caylloma, we have enjoyed a lot of exploration success, and that's why we currently are seeing Caylloma with 6 years in reserve. And when I talk about Caylloma, I have to consider as well the resources we have, because if you add a conservative estimate for conversion of resources to reserves, you're looking at Caylloma good for 10 years, a decade. And that's on the back of exploration, successful exploration results. Moving on to Mexico. Mexico is our second largest exploration budget. Our largest exploration budget is in Séguéla, about $9 million for the year, and San Jose is $7.5 million for 2022. It's our second largest exploration budget. We continue drilling. We have not had success in balancing depletion at the mine. What we have been able to do over the last couple of years, and I believe that's a likely outcome this year as well, is we're making discoveries that are slowing the rate or pace of depletion, right? So that mine today is looking good until 2026, based on the reserves we have, and we're making discoveries, nothing screaming, and what we are being able to add, what it's doing is slowing down the rate of depletion, right? But we continue drilling aggressively. We have lots of ideas that we're pursuing. Also in Mexico, in northern Mexico, we have Baborigame, which is a greenfields project. We have done some drilling there, still at the proof of concept stage. Our drilling has given us encouragement to go into a second phase of drilling next year. And I had a call with our VPX this morning, and we actually touched on that. So you'll see us drilling Baborigame again next year. Moving on to West Africa, at Yaramoko, we continue drilling. We haven't enjoyed a lot of success there with the drilling. It's our third largest exploration budget, looking at mine sites. We haven't had a lot of success, but we continue drilling, and really everything has been a bit overshadowed by the tremendous success we've been enjoying at Séguéla. If I look at our current size of reserves on a global basis, Fortuna currently has close to 4 million ounces, that's gold equivalent ounces, in the reserve inventory. 4 million ounces of gold.
Okay, and one more question then, Dave. I will toss it back over to you. Jorge, you mentioned Lindero in there, where you had a 28% increase in volume of gold sold, which was certainly pretty impressive. And question comes in with exploration and more development. Is there the potential to increase production there over the long term? And what do you envision about 2 or 3 years down the road?
No, right now we are not contemplating an expansion at Lindero. It's not something that's in our plans right now based on the reserve we have. As I say, we continue drilling, and that story can change with drilling success. But that mine is good until, for 13 years of gold production. It has the grade profile of that mine is not stable every year, right? You never find that. So the grade profile changes and oscillates, and through our mine scheduling, we try to balance that off to have a bit of stable production. But the mine is a steady producer for 13 years, pretty much within the ranges of 100,000, 120,000 ounces.
Okay, and Dave, would you like to take it from there?
Yeah, first I wanted to just point out, I was looking at it this morning, the stock price actually has started outperforming GDX and GDXJ starting in late September. So in my mind, and that was, I think that was even before your Q3 production numbers were released. So in my mind, I think the market is starting to catch on a little bit to, the value of the Roxgold acquisition and what it means for the company and cash flow generation. So I had a couple questions that are kind of looking out in the future, because I primarily analyze junior mining projects, so I like to have my imagination teased a little bit. Have you started drilling at all on Bosura?
We're done with the drilling for 2022. I have to say that we have a challenge in Burkina Faso. The security situation in Burkina has been steadily deteriorating for a number of years. I first, went to Burkina Faso in 2015, and Burkina Faso in 2015 was understood, recognized as a quite, safe jurisdiction from the perspective of security, a very welcoming place to foreign direct investment in mining. But since then, the security situation has been deteriorating, and that has aggravated, that rate of deterioration has steepened in the last couple of years. So at this stage, based on the conditions on the security situation, we are not looking to invest in Burkina Faso outside of Yaramoko, right? So we're placing Bosura a bit on hold until we see signs that the security situation in the country can't change. Now, let me say something. Although the security situation is concerning, we recover VAT from our exports, right? VAT recovery is important to the business across all jurisdictions. The country that is most prompt to return VAT, and we're talking about millions of dollars, is Burkina Faso. Ahead of Mexico, Peru, Argentina.
It's interesting.
Burkina Faso returned to Fortuna close to $11 million in the third quarter in VAT. Sometimes it takes us 2 years to recover VAT in any of these countries. Burkina Faso, we're always 6, 8, 9 months. Sometimes it goes to a year and then they bring it down. So, in spite of the political process, which is turbulent, because I break it into the political process and security. Eventually they're interrelated, yes, but you have governments that, in spite of change, are welcoming to foreign investment in extractive industries, in mining, and they come through with actions following on words, right? Unfortunately, the deterioration of Mali in the north permeates into Burkina Faso.
Mm.
And so Bosura right now for us is on standby.
So I just had a couple questions about Séguéla. When do you expect that to be fully ramped up?
That's a good question that was asked in the call. We are tracking well to start pouring gold in mid next year. Let's say June. It is our expectation today that we can have a quick ramp up. By then we'll have enough ore in the ROM pad to feed the mill at nominal capacity. We have enough water stored already in our water storage facility to source all the water we need. We have access to all the power we need. We just need the equipment to perform according to design and expectations, right? And it is our expectation right now, David, that we can achieve we can be within 85% of design parameters on throughput, on gold recovery within a matter of weeks. No?
Wow,
That's an expectation.
that's impressive.
That's an expectation.
So you mentioned you spent $9 million exploring Séguéla this year.
Yes.
Do you have any plans to put out an updated resource estimate anytime soon?
Yes. We had a most exciting discovery called Sunbird. Just for the audience, the Séguéla deposit has in the current reserve, so in the feasibility study, the reserves come from 5 deposits. They are Antena, Hula, Agouti, Boulder, and Ancien. Those are the 5 deposits that are currently in the reserve. But you will notice that there is a 6th one called Sunbird. Sunbird is a discovery made last year. It's currently a 350,000 ounce inferred resource. And that is not in the reserve. And we have been enjoying a lot of success at Sunbird. I'm not sure if Chris can be crafty enough to put a longitudinal section of Sunbird that we might have there somewhere. And but at Sunbird, we currently have 350,000 ounces of 3.2 grams gold, which is above the average grade of reserve for the deposit. We have drilled beyond that resource and continue to find ore. So we're going to be updating the Sunbird resource estimation before the year end, and we should be in a position to publish that before year end. I think it's important because it has the potential to double the size of the reserve at Séguéla as we stand today.
Wow.
And that's easy to see in a longitudinal section of the Sunbird deposit. I really encourage you to look at our September 12th news release when we discuss those results. Yeah.
So just if you go back to that map again, and you're just talking about Sunbird alone has the potential to double the resource at Séguéla. And it sounds like it might also improve the grade. Not that, I mean, the grade's already incredible, but elevate the grade a little bit of the overall resource. Is that fair to say?
Yeah, it has the potential to increase the resource by 50%, right? We currently have in the reserve about 1 million ounces. And, I think our expectation is that we can go beyond the current 350,000 ounces, get closer to the 600,000 ounce mark. I mean, that's an observation that you can gather from looking at the drill results. have what we have currently in inventory, published inventory is 350,000 ounces, and we have already drilling that's public where we clearly show how we have materially extended mineralization beyond the limits of that resource, right? So
Can you go back to that map 1 second, Chris?
well, but if you scroll down, if you allow me for a second, if you scroll down, there is Sunbird.
Okay.
So the 350,000 ounces of gold that in inferred category that I am talking about are within that pit limit that we show here. That black line is the pit limit. So the 350,000 ounces are pit constrained within that. And here what we're showing is how we have been able to already extend mineralization beyond that pit limit. I mean, this is a longitudinal section. It's simplified for the reader, but I think it gives you a good sense that we have a tremendous opportunity to significantly increase the size of the resource at Sunbird, right? And we are materially showing that here.
That's incredible. And then just real quickly, if you could go back to that other chart. So once Sunbird is incorporated into the resource estimate, then you'll have 6 deposits, but there's those yellow dots there on the map. And then a lot of those white stars, which are clearly, the yellow dots look like they have discoveries on them. And then the white stars are prospects. And again, just to tease my imagination, and I know you can't put anything definitive out there, but I don't know. It just kind of feels to me like Séguéla is at least a 3 million ounce deposit at some point in the future. Am I coloring outside the lines there?
Well, you can say that. I can't. You'll get me in trouble.
Would it be unreasonable for me to have that?
But I'll frame it. I'll frame it.
That'd be great.
I'm a geologist. I'm a geological engineer, and I'm an explorer at heart. And we have always had to make decisions with little information, right? We have always confronted as a geologist, it's not math. So we're always confronted with making decisions with little information. And what can we say that's factual here? So you make up your mind here. We control, these are the Birimian greenstones, which is the most productive type of rock or host rock in West Africa. These are the productive gold rocks in West Africa. These rocks host some of the most significant deposits, that Randgold had, which now is part of the Barrick portfolio, and Endeavor Mining. All of those deposits are in these same rocks. We control from north to south 30 kilometers, 30 kilometers of that structural belt. And we have already identified multiple prospects. And as we advance through those, they're maturing into resources, reserves. So, these deposits started, that map only had antenna before. And then it had Kula, and then Agouti, Boulder, Ancient, and now Sunbird. So why did we buy Roxgold? We bought Roxgold because of this. Now, I don't know if at the end of the day, there will be 3 million ounces here, or 2, or 1.5, or 5. I don't know that. But I surely want to discover that. I surely need to answer that question. And that's the beauty of this business. No, I think with what we have, we already have a business that will have an internal rate of return on investment of 40, 50% plus. And this a mine that's going to operate for over a decade as it stands today on reserves. And everything else, well, is for me to find out, right? And that's what we're doing.
So I guess just because kind of the way that I look at your assets, and if I just zero in on Séguéla, and I say to myself, okay, let's just say it's 2 million ounces. Somewhere down the road, you increase the tons per day of the mine. I mean, I personally would look at Séguéla. I know Don, and I agree with Don that Yaramoko and Séguéla together are worth the current market cap of the stock. But I think you can make a case that Séguéla alone is worth the current market cap of the stock, which means if you invest in the stock here, you're getting all the other assets for free, basically.
I think Séguéla, we bought Roxio because of Séguéla, no? We have a strong conviction on the potential for Séguéla to be a significantly larger deposit. We need time to prove that, right? But what is it that we look at as exploration geologists, as geoscientists, when we make those judgments? The rocks, the structural controls, the surface expression of the system, and this has all the trademarks that you want to see, we just have high convictions on the potential here, right? It's the right geology, the right structure, the right rocks. And we're making discoveries. We're finding gold all the time, and we put that out in the news releases, right?
That's great. That's all I have.
Well, appreciate those questions, Dave. Don, did you have any other final questions before we wrapped up today?
Yeah, I did. So yeah, people are starting to realize the quality of those Roxgold properties there. They were world class, both of them are. I want to talk a little bit about Argentina and Lindero. So, if you look around today and you look at the development projects that are advanced, some of the juicier ones, one of them is Abra Silver down in Argentina. So if you look at the companies that are going to be interested in, in buying that project and developing it, there's not that many, really. It's a handful, and you're one of them. So it's going to be, they're finding a lot more silver down there. They have a second discovery they just found. It's over 200 million ounces. So you're going to finish your development here at Séguéla in 2023. The Abra Silver project, and say it'd be ready to go into construction in 2025. If you take 2024 off, 2025, you start building that. That's a big silver project. The key is Argentina, your fit down there, how comfortable you are. I know inflation's crazy. We have currency controls was a problem, but that's going to help you buy it for a cheaper price. You can take your cash flow from Lindero and put it into Abra. That's a good fit there. So tell me about Abra. Have you looked at it?
Yes. I know Abra management, Abra directors, and we all like, I think, what Abra management is doing. We drive in front of it when we go to the Lindero mine, right? It's in Salta. Salta is a great province. If you ask me to rate what's the most welcoming jurisdiction out of all the places where we work, I would say Salta first, right? Salta.
So that project's worth more than your market cap right now. So you add that and your company suddenly becomes, huge.
Yeah. No, our business in Argentina currently is sound. No, our best business today is in Argentina. You were asking about Argentina. Our best business today is in Argentina. Our lowest cost mine, meaningful production, and we are able to repatriate our funds. We're not subject to the capital controls.
Why is that?
Because how we funded the project. No, we used a structure that allows us to not be subject to the exchange rate controls more than the capital controls. They don't have capital controls, but more exchange rate controls to I would talk
That's
about.
interesting. That's a big thing. That's important. I mean, as investors, because right now a lot of people don't want to invest in Argentina because of the currency control. So if you're bypassing it, that's really important.
Yes, we have been able to bypass them because how we structured our funding of the project, and that makes our business in Argentina our best business. And but at the same time, Don, I think we have to be consistent and send a message. I was in Washington, what was it? A month ago now, a month and a half ago, I was in Washington to meet with the Secretary of Economics of Argentina, Sergio Massa, and his team, no? And I had a meeting with him along with, a selected group of other companies invested in Argentina from across all industries. We had, oil sector companies, consumables, all of the large international, companies with presence. It was a round table with a small group, 10, 15 companies. And us and the Secretary of Economics. And the message was consistent, right? They want to encourage investment, but they know they are in a gridlock with lifting. They have to take the pain of a devaluation. Let's put it like that. And politicians are postponing that. And all of these macroeconomic distortions that affect the investment climate have to go away. So I think the message is, we're here, we're going to invest, but get the house in order. And I think it will be ill-advised to continue pouring money if they don't get the house in order. When we invested in Argentina, the government at the time removed all of these nonsensical controls and created. Go ahead.
I have one final question. So AbraSilver today isn't really for sale because they have this new discovery, but let's say a year from now, they basically start taking bids and you find out through the grapevine that they're for sale. At that point, are you going to look at it a lot more, strategically if that happens?
Yeah, absolutely. I mean, with our silver resource of that nature close to our operations, it would be silly if we don't pay close attention to that opportunity. We will be foolish.
That's what I wanted to hear, Jose. Jorge, that's what I wanted to hear. That's great news.
I know someone who owns Abra.
No, I own Fortuna. I own them both, but I own Fortuna. I'm more excited about Fortuna.
No, but it just makes so much sense. I mean, it makes a lot of sense. We would be foolish not to keep appraised and look at it. And
it's a good fit, right?
I mean, they have done an excellent job. It's a jurisdiction we like. We operate a mine in the neighborhood. We would be foolish if we are not paying attention, right?
All right. Thank you.
Well, that makes a lot of sense. And Dave, unless you had any final questions for today, or did you get everything you'd like to ask in there?
No, I'm good. Thank you.
Well,
thanks for your time, Jorge.
It's a pleasure to speak with you guys, really.
Well, Jorge, congratulations on the results. I certainly appreciate you joining us and taking some questions today. And I know you're up late there in Paris, but good to have you on the show. And before we wrap up, we'd just like to thank Don, who is joining us from goldstockdata.com, where you can find his research, and certainly quite a body of knowledge you have there in the mining stocks. Dave Kranzler at investmentresearchdynamics.com, where he writes his mining stock journal every other Thursday. And then again, of course, Fortuna Silver, which you can find at fortunasilver.com. So appreciate you all being here today and shedding some light on the latest results and the progress going forward. And that said, we'll wrap up for today, but thanks again, and we'll look forward to seeing you all soon.
Thank you.
Thank you.
And we